Now we're going to shift to products, crude exports, and look at what's happening in the international market because there's a lot of dynamics happening out there right now. And before we really dive into that, obviously we'd like to reiterate, please like, share, and subscribe. Your support is always welcomed and appreciated. So now that we've covered that, let's just look at the export side. So obviously we had the hurricane come through that shifted just, timing on getting stuff out, was it already there? So we did have an increase in gasoline and distillate exports. Nothing meaningful really in terms of kind of where we are, as we've been saying that we were going to stay relatively close to that 5 or 9 year average. And we'll go through it in a bit more depth. The LPG side remains strong for us. We remain bullish in terms of the amount that's going to be sent to the international market. It was up about 1.4 to about 1.4 million a day, up 224 versus last week. Again, those are things that are going to be lumpy, but with additional capacity coming from Phillips, it'll be elevated. So it's tough to look at the year over year or the 5 year just because there's just more capacity now. So there's more ability to get into the market. Gasoline is one, as we said last week, we thought there was going to be a little bit more support as we have additional flows into Mexico, some parts of Latin America. The one that's going to see the bigger headwinds over the longer term remains distillate, especially as we have Europe in lockdowns and additional flow that has been coming from East Asia as well as the Middle East, and in terms of just flows going in, as we now have companies looking to purchase VLCCs in order to store the additional middle distillate and diesel, just diesel in general or distillate in general on a VLCC. And just to be clear, you can do that as long as it's a new build. So you can put clean products into a dirty tank as long as either the tanker's new or if the tanker's been cleaned. Clearly, it's expensive to clean it. You won't do that. So they're trying to find some of the new builds that have only carried clean products in order to utilize that, because we do have that overhang, which that is going to put that pressure on our distillate exports. As we said, we thought we were going to see a big drop in U.S. exports. We thought it was going to be closer to about 2.7, 2.8. Obviously, it came down, and it was down about almost 1.2 million barrels a day, coming in at about 2.26, 2.27 million barrels a day. We'll see a spike from there. We will see an increase closer to about 2.5, 2.6. The problem is we're starting to get towards the end of the purchases that have already happened from China, South Korea, and Europe. And just based on the way spreads are set up. So just to give you an idea of what does that mean, right now when I look at LLS versus Brent, it's about 40 cents to 60 cents, depending on how delayed I am and what the timing is. So when we look at Cushing continues to build, because when we look at Magellan East Houston, which is on the Houston Ship Channel, and LLS, which is Louisiana Light Sweet, we're really not competitive into the floating market. And it's coming from multiple sides. We have Libya that's now at 850,000 barrels a day, well above expectations. We'll go through that in a bit more. Ural's pricing continues to get pressured. Nigeria has cut official selling prices, and now we have more North Sea, Norway crude getting left in tankers. So again, all of those pieces are just putting additional weight on just the spreads and is capping really how much crude we can get into the export market. We still have some residual purchases that will continue to get filled. It's just a matter of timing. They will be lumpy. There will be some makeup because of Hurricane Zeta. But as we look into November, December, January, it's just going to be difficult to see some of these exports maintain the levels that we have seen already. Because when we look at where we were, we averaged about 3.2 million barrels a day. It's a little bit below expectations in September. But again, it was still, in October, but it was still very strong. It's just we're not going to see those levels just based on the way current purchases have already happened. Now, when we look at gasoline exports, we expected to see a bounce off of that low. Again, the view is that it's going to trend closer to that 9 year average. It's right now pretty close to the 5 year average. But we just want to look at those 9 years, because 9 years is really when we've been exporting a significant amount. And the trend is up when we look at from August into December. You can see that 9 year average trends to the upside. always lumpy in terms of what it is when we start to average it out. It's something where we think we're going to fall closer to that 9-year average, but still remain above it just because we do see additional flows coming into Mexico and other parts of LATAM. The question is always going to be how much Hurricane Zeta timing, but as we go through the remainder of the month, we think we're going to follow that trend, stay a little bit above it, but still remain pretty close to the total average. Distillate is the one that we were saying that we were going to bounce off the bottom. We were still going to maintain below that 9-year average, and kind of here we are. We don't think we get back to the average. We might get one week. It could be this week or next as some of those shipments are made up for Zeta that might have been missing. It's just when we look out and we look at lockdowns, we look at slowdowns, we look at industrial data starting to worsen. And in the econ show, we're going to show data that came out prior to lockdowns and the rise in cases, and the data that came out afterwards, just to see that some of it shows there two different pictures. One of them is before, pre-lockdown, post-lockdown, so things will tighten and get a little bit worse, which will put pressure on our exports, especially as we have people looking to find ways to store it onshore, offshore, additionally offshore. So that's, again, just going to cap kind of where we can send things. When we talked about Fujairah, and so I apologize, but we don't have Japan. Japan has now delayed their release until Thursday. I can get it sooner, but it's for paying clients, and if you pay for it, you typically can't share it on shows like this, so we're going to have to wait. So we'll start to include that in different shows just to still get that information out there, but it just won't be included here anymore. So when we shift to Fujairah, we had a big increase of about 1.2 million barrels. Again, it's something that we were saying that we were going to we were going to see an increase just based on where the flows were going. Again, it's still fairly strong, fairly bullish, just because when you look, we're still below 2018. Typically, we normally see, like if we look at 2019, we have that spike higher. When we look at 2017, we start to see some of those trends going up and then fading back. The issue is going to be middle distillate exports, because when we look at the Middle East was exporting into Europe. East Asia was exporting into Europe. Now that they're not only have a lot of product in storage, they're now looking for offshore floating. And it's just those slowdowns are going to put weight and is going to put some of this distillate inventory back into Fujairah, which we'll start to see some of those increases. But again, we're starting from such a point that the increases will be fairly small in size. It'll be a bit more along the seasonal norms, we think, in terms of where 2019 was, but we're by no means getting to the highs that we saw in essentially through May. Now, again, this is looking at all of distillates. When we start to break things out a bit, you can see that middle distillate stockpiles near a record high. And the heavy resid continues to shift lower as refiners either recrack in specific ways and or find other uses with the heavier resid, or crack crude to avoid some of the heavier end. The bigger issue is middle distillate continues to grind higher, that comes down to, again, industrial demand, bunker fuel, MGO. We're seeing those pressures as we've been talking about with global trade. Global trade remains fairly slow. It's still up versus the lows, but again, it's still down year over year. It's still having those issues overall, and that's being reflected the most in that middle resid and some of those light components. And that's something that we think is going to continue. And it's, again, the tale of two cities in terms of heavy resid should continue to kind of drift to the downside. But the middle light distillates is something that we continue to see building, which is something that we've talked about happening not only in the U.S. with some of those export headwinds, but also in Europe and specifically in Singapore. One of the bright spots remains India. India saw the first year-over-year increase for this week and last week. And again, the festival season is big there. So that is good in terms of moving products, people buying, people moving. India remains a bright spot. China is the one that we remain concerned kind of for where things are going to go over the next few weeks. This is just looking at worldwide crude floating storage. It was down week over week, but again, we're kind of within this tighter range that we've been in since, let's call it the beginning of October. Right now, we're down, just to put it into context, we're down about 7.7% from October 23rd, which is 146.37 million barrels. We're still up 102% versus last year, so we still have those increases, and that's something that we think is going to get worse, especially as China is pulling additional flow into the system. But again, we still see runs. On a teapot side or the independents, it's fairly flat. It still remains at about 74%. But the bigger issue is when we look at the state-owns, they remain very depressed at about 72%. So just to give some context, Europe is down about 21% week over week, Middle East 15%, West Africa 6.6%, North Sea down 8.6%, with the Gulf Coast, as we talked about, up a little bit. The problem, because again, some of this is delayed data, the North Sea in Europe we see continuing to increase because the loadings have been delayed or deferred, which is something that we're going to talk about in a bit more detail coming up. So here, when we look at the Shandong independent crude levels, so right here you can see that we remain at seasonally adjusted all-time highs. We did get a small decline. It went from about 47 to 45. Some of the bullish side that came through was that China increased their 2021 quotas by about 20% on year, putting it at about 243 million tons. Now, just to make it apples to apples, that's about 823,000 barrels a day. So you might say it's like, oh, well, that's good. That means that they're going to have an increase utilization rates, but it's really not. When we look at the backdrop of it, we have several facilities coming online. So right now, the incremental volume, 41 million, should cover the feedstock requirements for the new 20 million a ton phase 2 project, as well as the new 16 million metric ton a year Shandong petrochemical. So again, we have two new facilities coming in. And it just to put that into context, those will be the new increases is not going to increase the utilization rates that's currently there. It's just helping the flow coming through. Now, they left it a little open-ended. So just looking at it in terms of a backdrop, when we look at the growth from 2016 to 2020, you can see that the first one, that MOFCOM, that's just looking at the state data. So that's what the state is taking, or the CCP. The independent refiners is the combined quota. So that's where you can see the step up. The reason why it's important to look at this is because the target on the first line, in terms of what the state is allowing or the CCP is allowing, they've left it a little open-ended, where they essentially said that this is what's been designated, but if they see more demand coming in and all of this is going to that feedstock for the two new facilities, they've left it open where they will increase it again to allow for additional increases in utilization rates. So this is something to watch, just because there could be some upside movement. The problem is right now is just kind of this tale of two cities, where Angola is finding a fairly strong home, and it's something that we wrote about in our report that comes out on Friday, and we'll cover it in some detail on Friday, but we go in depth on the report. Angola is seeing a pretty steady flow into Asia, specifically China, but Nigeria is seeing an increase in deferrals. Europe is seeing an increase in deferrals, and it's all because we have additional Libyan flow. And at the same time, we have an increase in loadings out of Norway, and West Africa, specifically Nigeria, is continuing to see deferrals as they continue to kind of cut OSPs to try to move some of that volume, because Nigeria typically sells into Europe. And now Europe has Libyan barrels that they normally take, as well as Nigerian barrels, which, if you look at Euro pricing, which is down again, there's just more and more pressure coming in. So we have China that could come in to pick up some of those cheaper spot cargoes, but that's going to be something to watch, because we do think China offshore storage is going to increase. Now, when we look at crude oil on the water, no surprise, we do have an increase. We talked about it last week. And it's really because we have Libya increasing to such levels. We have flows coming out of West Africa. We have flows coming out of Europe that are increasing, which is just going to, again, put more pressure and put more crude oil on the water. Now, the other side of that is, again, where is that oil on the water going? Because we did have a small decline in floating storage, it's now oil in transit. So you can see that tick higher in crude oil in transit. We think that's going to continue to grind higher. Now, there's two sides to that. One, it should move higher just based on the seasonal aspect, where typically we'd normally see an increase in runs. People start to create heating oil and other types of distillates. So we normally see that increase. The question is there the demand? Because right now the refinery utilization rates are still depressed. Europe remains down. Saras saw a little bit of increase in utilization, but again, nothing meaningful to say that they're going to be able to take down all that new crude. And floating storage, while the trend has been pretty steady from June to now, we're starting to see it level off, and we think that we're going to start to see those increases, especially as we have North Sea, Europe, West Africa crude that is struggling to find a home due to the new volumes coming in. Now, when we look at, we keep talking about North Sea, but at least 7 VLCCs are booked to load North Sea crude this month. Some of them may float because they don't have buyers yet. There's been a lot of spec buying with the assumption that some of this will end up in China, because China has been a fairly big purchaser of North Sea crude. You can see that we're still well above the 5-year average. It's something where we think we're going to shift back up and set those, relatively speaking, those new seasonal all-time highs. But it's just a matter of where we were previously. We don't think we're going to get back to these levels from May, but they will start to trend higher, and we will start to see those volumes hit. So bookings of VLCCs to load North Sea crude surge over the past month, again coming back to that China side. But traders, they're waiting to see Asian buying, and so far they haven't really come through, which is going to be a problem because they can't really dump it to Europe because Europe's cut runs, and Libya crude is now at 850,000 barrels. So looking at Europeans' floating storage, again, this is something that's going to drift higher just because Europe has nowhere to put it. Their onshore storage remains fairly full, and you do have those lockdowns that are going to be that weight over time. Here's where we saw and we continue to see those increases coming back to Angola versus West Africa. This is one where we think we're going to see another increase in West African crude. So we keep talking about Libya. To be clear, we thought we were going to be at 390,000 barrels a day into the end of October and about 750,000 barrels by the beginning of Q1. Instead, they're at 850,000 barrels with the target of hitting about 1 million barrels by the middle of this month because the last facility turned on. Now, when we say the last facility, you never just go right to the peak. You typically bring on anywhere from 10,000 barrels to 40,000 barrels, depending on the size of the facility. Make sure everything's working. And then once you know everything's working, you can ratchet up fairly quickly, which is something that we're seeing in Libya. Now, what does this mean for West African crude is Libya is going to displace some of this crude based on just location, the cost of it, and just the quality of it. Now, when we look at Middle East crude, this is one where we think you're going to start to see those increases overall, just because there's going to be problems with moving those cargoes because Urals are starting to trade cheaper. Russia is trying to send more into the overall Chinese market and Asian market in general. But we also have an increase in Iraq because Iraq has increased their barrels by about 250,000 barrels a day. On production-wise, about 276,000 barrels a day in exports, which is putting them over about 680,000 barrels above where they should be. The overarching problem here, just looking at this, the Middle East and specifically Saudi does not want this to get elevated because this would obviously be a negative indicator. So what happens with the OPEC agreement? Remember, in January, they're supposed to increase about 2 million barrels a day in that target. Now you have Libya that has brought back, when just assuming they reach their target of 1 million, with their target of hitting 1.2 million by the end of the year. That means that in January we would have an additional 3.2 million barrels. So the expectation is that you're going to get either an extension of cuts for an extra 3 months. There's comments now that instead of it being 3 months, it'll be 6 months. But there could be a situation where there's an additional cut, where instead of seeing an increase of 2 million, we could see an additional cut of anywhere from 500,000 to 1 million. Something that we're going to continue to watch, we'll continue to talk about. But when we look at spreads, that's something that we're seeing come up more and more, and is putting weight on spreads throughout the area. This, as we said, we thought Asian crude floating storage, the declines were going to stop. You have a small increase, but again, not too much. It's one where India continues to be kind of the bull story. China remains kind of the bear story because people were buying speculatively into China. So that's why we're going to see an increase in floating storage in China, where India continues to pull down. This is one where it's not so much that we're going to see it go back up or coming back down. It's just we think it's going to stay fairly sideways and be relatively lumpy through the end of the year unless we get this big increase in Chinese demand, which just given the fact that they've essentially tapped out their import quotas for 2020, it's unlikely to see too much of an increase, which will put more of this crude on the water overall. Just to reiterate, because we talked about it on Friday, the middle distillate builds continue to increase in Singapore. You can see that remain at those all-time highs when we look at it on a seasonally adjusted level. And it's just that the problem remains middle distillate. Where is demand? Where is that going to happen? And spreads continue to kind of show that there's some of the pressures is real. The benefit now is some of the refining margins have recovered. We still see some pressure across different margins. It's all kind of spits and starts. So we do have some benefit, but again, nothing really meaningful because we should see some recovery as people purchase more heating oil. The question is going to be, where are those VLCCs filling up? Where do they sit? What discount do they go at? And then where do these lockdowns continue to increase? Does India have a new resurgence, which is probably likely, just given the fact that people are getting together for the festival. And then when we look in the U.S., as people are pushed back into as the cold increases and people go indoors, will we see an increase, which will push for additional lockdowns and restrictions, which is likely, again, putting pressure on those total consumption. So thanks again for watching. I know we went through a lot. Please leave comments, any questions you have. And then we'll continue to update you as we go through. The Econ show is going to come out on Thursday. We obviously have a lot to talk about with the election. We normally film it today. It's going to be a little tough now, just given the delays in some of the data. And as we go forward, we'll see a little bit more. And then obviously on Friday, we have our favorite, the primary vision Frac Spread Count. And just as we sign off, the new data came out from the BSEE, where total oil shut-in is at 48,000 barrels. So we're already seeing an increase. So that should be normalized by at least Friday. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.